Good afternoon, friends. Budget 2023 is on the anvil and to be announced by the Honorable Finance Minister on Wednesday. For an analysis on the budget, we have a series of videos. Today we will discuss on the expectations on personal taxes, tomorrow on corporate taxes and indirect taxes. On 1st February, just after the budget, we would have our views and analysis of the basis of Finance Minister's speech, and on 2nd of February at 9 AM sharp, we will have our webinar on detailed analysis on budget proposals. So please stay tuned to our series, and to start with, in this video we will discuss on the expectations which have now been formed up in the Ministry of Finance in the area of personal income tax. We will discuss 10 such expectations. To start with, the valuation of rent-free accommodation for salaried employees is done on the basis of percentage of salary. 7.5%, 10 or 15% of salary is deemed to be the value of the rent-free accommodation taxable in the hands of salaried employees. Now this has a sense of inequity in as much as the same employee using the same accommodation, if he gets an increment, then the value of rent-free accommodation for the same accommodation also increases. This value of rent-free accommodation should be and is expected to be amended by this budget to fair market value of similar properties in the close vicinity of the accommodation to bring in equity and fairness in the valuation. Next, leave travel concession exemption under section 10 subsection 5 of the Income Tax Act does not include exemption on account of expenditure on foreign travel and mainly on accommodation expenses incurred during such travel. Foreign travel expenditure as well as accommodation expenditure are expected to be included now in valuation of leave travel concession exemption. Next, leave encashment limit for exemption under section 10 subsection 10 AA is 3 lakhs from the last 21 years, and an increase in such limit is now long due, which is expected by salaried individual in this budget 2023. Deduction on account of investment in national pension scheme is only 50,000 for private sector employees. This is expected to be increased in this budget. Dividend distribution tax was abolished in 2020, and now the dividend income is taxed in the hands of the recipient itself. However, there is disparity between the rate of the tax on dividend income between residents and non-residents. For residents, it can go up to around 43%. However, for non-residents, it would be 28.5% even if the highest rates of surcharge are taken. Therefore, there is some sense of disparity in this tax rate, and it is expected that the Ministry of Finance would take cognizance and possibly there would be a special rate for taxation of dividends in the hands of recipients in this budget 2023. Well, it is widely expected this time that personal income tax rates would see rationalization. To set in the context, the personal income tax rates in India, if we take the highest slabs of surcharge and the highest slab and tax rates, would come up to a whooping 43%, whereas in countries like Hong Kong it is 15%, Singapore it is 22%, even in Bangladesh and Sri Lanka and these countries it is much less than in India. In this budget it is expected that the personal income tax rates would be rationalized and the initial slab for exemption would be increased from 2.5 lakhs to at least 3.5 lakhs. Also, the new scheme of personal income tax has seen a lukewarm response from the taxpayers. It is expected that the new tax scheme and the old tax scheme may merge and give rise to a hybrid tax scheme, wherein at least the highest slab for 30% tax for individuals would be increased to 15 lakh rupees from the present 10 lakh rupees in the old tax regime. Standard deduction again increase is long due and it is expected that it should be increased from 50,000 to at least 75,000 rupees. Deduction under section 80C for investments. Now that was 1.5 lakhs and it is continuing from 2014. Hence it is again long due, and even if an inflation of 6% per annum is taken on an average basis, it should be around 2.5 lakhs at least in this budget 2023. Interest exemption for home loan, the limit is 2 lakh, should be increased to at least 2.5 to 3 lakhs by this budget. And lastly, due to the increase of medical expenditures and the uncertainties in the current scenario for medical expenditure, it is very important that the deduction under section 80D for medical insurance be increased for non-senior citizens from 50,000 to 75 and for senior citizens from 1 lakh to 1.5 lakhs. Hence friends, these are our 10 expectations in the area of personal income tax from this budget 2023. Tomorrow we would analyze some expectations on corporate income tax, GST and customs, including the expected new SEZ Act. So please stay tuned. Thank you very much for watching. Please do share, subscribe and like this video and channel for maximum dissemination of knowledge. Thank you very much.